Chairperson, I will do an introduction being assisted by Ms. Duplessis and Mr. Njezula. Chairperson, you will recall that we started a process of reviewing the methodology around March, April. And this process is in two phases. The first one is relating to the interim methodology, and the second phase is relating to the permanent methodology. The main reason for the interim methodology is to deal with the spikes that is brought about by the international gas price, and secondly, to deal with the unintended consequences of the methodology. And therefore, in April, we published a discussion document with options that NERSA proposed in order to deal with those challenges and to cushion customers against the impact of the spike in the international gas price. And regarding the permanent methodology, we published 6 options that NERSA was considering as a permanent methodology for the regulation of the maximum price. Chair, in this submission today, we are presenting the revised or the second consultation document, which takes into consideration the inputs that we received from stakeholders. I am going to ask Mr. Njezula just to summarize what we are proposing in the methodology. But perhaps before he does that, I will ask Ms. Duplessis just to indicate what is that particular problem that we are trying to resolve, or the market failure we're trying to resolve, and what is the outcome that we are trying to achieve, followed by Mr. Njezula summarizing the proposed methodology. Ms. Duplessis, over to you.
Thank you, Ms. Makota. Chairperson, just in summary, the market problem or failure that we are trying to address by approving maximum gas prices is the level of inadequate competition in the gas industry, and particularly in the gas trading markets. Our determination of inadequate competition that was made on 25 February 2022 made a number of key findings. Key of them are that the South African pipe gas industry continues to be dominated by one player. There are significant barriers to entry and expansion in the gas industry, particularly the lack of the availability of new gas supplies and the infrastructure required to enable those supplies. And then also customer countervailing power remains limited because there are lack of viable alternative sources of gas for customers to switch to or threaten to switch to when they negotiate their gas prices. So what is NERSA supposed to do about this, or what is our mandate in terms of addressing this problem? Chairperson, because of this inadequate level of competition in the market, it means that there are no competitive constraints in the form of competitors or customer countervailing or bargaining power, or the threat of new entry that would serve to constrain the significant degree of market power that the players or the monopoly in the gas industry has. Therefore, without the regulatory intervention by NERSA, the players or the licensees in the gas industry would be able to charge uncompetitive, in other words, excessive or unfair prices for gas that they sell to customers in South Africa. Therefore, as an economic regulator, NERSA needs to put measures in place that would act as a substitute for competition, or a substitute of this lack of competitive constraints in the market, in order to ensure that customers get a fair price, but also that suppliers are fairly rewarded for their investments and their service in the industry, but also to facilitate the establishment of conditions of effective competition in the market. Therefore, how do we achieve to do that, or what is it that our maximum price that we set needs to do this in terms of Section 4G and 21(1)(p) of the Gas Act? Firstly, we need to emulate maximum prices that would persist in competitive markets, and specifically specifically, we need to estimate what prices in the South African gas market would be were there adequate competition in this market. Secondly, we need to set a price that would facilitate investments so that the conditions for effective competition in the market is established. That is really essentially what our maximum prices need to do. In summary, to emulate competition or to mitigate for the lack of competition in the market by setting prices that would persist in a competitive South African market, and secondly, to facilitate the establishment of conditions so that that competition may develop over time, and that is specifically therefore to facilitate investments. Thank you.
Thank you very much for articulating exactly what our mandate is. I think that is very important for the discussion that is going to ensue, and it is like that, and is confirmed also by the Supreme Court of Appeal as well as the Constitutional Court. It is that economic parameters of our mandate and our legal mandate as stated in Section 4G as well as Section 21(1)(p). So let us hear how then do we respond in ensuring that we give effect and the interpretation that is given to that mandate. Please present like that as to what is being proposed for now in dealing with that problem, and in also responding on how we can embark on this process of trying to give effect to our mandate. Please get straight to what is proposed. Mr. Njezul.
Thank you, Chair. Thank you, Chair. From an application perspective, what we propose is a methodology that is cost plus base, also a hybrid methodology. Also, what we, from a transitional perspective, given the Gas Act, that will be easily the pending Gas Act, that will be easily transitionable. And also what we also, from a ease of application perspective, that we believe that it's easily applicable. And what it also from a risk allocation perspective, that it does allocate the risk appropriately between the market players. This methodology, it's a cost-based methodology with an element of a markup, which is a markup which is benchmarked, with also an element from a rationality perspective, where we've also included a work component to it as to from a rationale to assess the reasonability of this markup. And also in line, we will also try to make sure that it's also in line with the current market structure, and as well with the current Gas Act, and within the framework of a maximum price. So it is as per the. So we're requesting that the committee assess or approves the publication of this methodology and also so that it can go out to the public for consultation. Thanks, Chair.
Mr. Kotora, you may add.
Thank you, Chair. Chair, I'm just enhancing the contribution from my colleague. This methodology, Chair, starts with the cost of the licensee. And as a profit, we are adding a markup or a premium. The way this markup is determined, we scout for companies in competitive markets as per our mandate. We look for companies operating in competitive regions or competitive markets and establish their margins or markups as a percentage. Those markups are then averaged to come to an average number, which we are then going to use in South Africa for our licensee. So if we have an average markup, for instance, we can say the average gross margin for 10 or 5 companies, we then take that average percentage and add it to the cost of our licensee to come up with a maximum. But we are not adding the gross margin as it is, Chair, because it's a gross margin. In the markets that we are taking these companies, they then subtract trading costs, distribution costs to come up to a profit figure that is added to the cost for those companies in those markets. So we have acknowledged that there are differences with those markets to our market here. So we took the gross margin and we are adjusting it for trading costs and distribution costs as shown before, such that you have a net figure, which is the profit that will be added to the cost. This deals with any double counting that may occur if we simply use a gross margin that has not yet been adjusted. So, Chair, this method is not very different from the one we had before, but that we are not purely relying on prices that are prevailing internationally. We are taking margins now, and those margins are the ones we are adding to our cost, our local cost. This ties now to the Constitutional Court's decision, which said, in whatever you do, you have to know the cost of the monopoly. So the way we were doing it before may have worked, but this is such a direct method, and it ensures the members know exactly the profit component that's going to be added when we are approving this price. So it's a refinement, and I think it is also aligned to the principles that we articulated to say we need a price that is competitive, but we should also meet guidance from the Constitutional Court decision, which said you must find a way of having a price for a monopoly in the market. I thought we should add this, Chair, for the benefit of the committee. Thank you, Chair.
Thank you, Mr. Kotora, for that clarification. I think it is very important in terms of how it's determined, and also mentioning that point that it is not the first time that NERSA has come up with a methodology that is considering the cost pass-through approach, and it was also subjected to the scrutiny of the Constitutional Court. Thank you for clarifying that. I would like to then open the matter up for the questions from the members. Since we also had a workshop earlier on this same matter, I would like the team to also take into consideration the questions that were asked by members during that workshop, of which questions the team could not get sufficient time to respond to. Please, you must take the time to respond directly to those questions. And at this point in time, in case members do have additional questions of clarity to ask, and the team can then be in a position to answer all of those questions or clarify those questions. And remember that this is a matter that is here for the second time, and it is intended to do a second round of consultations, but now it's no longer a menu of methodologies that are proposed. It is now one methodology, having looked at what needs to be done. So this is what now the committee is requested to approve for purposes of consulting on this particular methodology. Members, over to you by show of hands if you have any additional questions or guidance that you would like to provide for the team to take into consideration for clarification, and also perhaps some questions that the team may need to include for stakeholders to respond to. Over to you, Mr. Mkhize. Mr. Mkhize, you might be speaking to a muted mic.
Oh, thank you, Chairperson, and thanks to the presenters. When I look at 5.11 and 5.12, the last sentence there says that, however, these hub prices have become very volatile since the first quarter of financial year 21. And then it says, as a result, the volatility and surge in international spot prices has created a disconnect between gas pricing and its cost of procuring and supplying gas, thus limiting the methodologies used to allocate economic surplus in the local gas market going forward, as was originally envisaged. I think I would appreciate that maybe if we look at this, there are non-geopolitical upheavals that caused this challenge. The question would be, when it is business as usual, will this return to being representative? In other words, when we know that certain decisions are circumstantial, we should be able to state those circumstances and whether something is going to be universally applicable and therefore not time bound. It should also be clear. The same when it goes to its applicability to a particular form of gas or type of gas vis-a-vis being applicable throughout. I'm the first person that would like us to consult with the public on an issue, because we don't have the monopoly of wisdom to be able to then get their inputs and have a methodology that is going to be workable. But I think it will help that we also clarify this thing of interim vis-a-vis fully fledged implementation. We had a cost pass-through methodology in the past, and my understanding was that in principle there wasn't really much of a problem with that methodology. I think it would be important that when we look at this cost plus, we kind of juxtapose it to this cost pass-through and see how it has improved vis-a-vis the cost pass-through as it was. What kind of improvements are we bringing? Because for me, the issues of efficiency and prudence will then weigh in terms of that. So for me, that would be important. And then to say that we had this hub, and now we've got proxy companies. What are the chances that maybe certain things could happen to those markets, which will then render these companies no longer representative? Like in the same way that we have dealt with the hub, we also need to talk to that issue. And then we need to talk to issues that pertain to unintended consequences. That is the pros and cons of a methodology and how we're going to mitigate that. For me, that would be important. And to be clear as to how, with the pricing, what are we then going to achieve as a result of the price? In terms, if one look, for example, at the even the act itself, what it seeks to do in terms of the objects of the act, and how then the price will actually steer the behavior in the market towards the achievement of those objectives. Thank you.
Thank you very much, Mr. Mkhize. I think all of the questions you've asked are very clear, and I'm hoping that the team is preparing itself to respond directly to all those about 4 key questions, and they are straightforward. Mr. Gumede, over to you, sir.
Thank you, Chairperson. I'm partly covered by Mr. Mkhize, but I just want to introduce my questions like this. That firstly, there's a number of questions that I may have asked at the workshop were intended for the workshop, so I may not necessarily. I think in choosing to respond to some of them, I would implore the team to choose which ones are governance type questions versus things that might assist with the methodology, with the consultation on the interim methodology. So that's the first issue. I just have one question that I think for this platform that I'd like to pose, Chair. And it goes like this. Do we believe that, as you would know, Chair, that the price is a signal for investment? And it's a signal for investment in terms of the demand sectors. If they see the price of the commodity, the sustainable price of the commodity, the long-term price of the commodity as justifying them switching from whatever source of energy they may have been using in the moment to switching to gas, that in the long term they believe that it is worth doing that. Therefore, it is worth them investing in their own associated infrastructure that would be able to use the gas and change from whatever else that they may be using, including moving from anything electricity based to gas based, or moving from any form of electricity generation forms to gas based approaches. Now, well, I guess what I'm saying is that so that's a demand sector, and that's going to be determined by the price. It also indicates the price sends a signal to the gas suppliers who might see South Africa as a destination to actually look at supplying gas into South Africa. And also it sends a signal to people that need to invest in the requisite infrastructure. So that is the premise of my question. So the question I'm then asking is, do we believe that the current approach that is proposed sends an appropriate signal that will promote the use of gas in South Africa? I'm hoping that part is clear. And then secondly, so what I'm then saying with that is that, do you believe that the demand sectors, not just the existing ones, but prospective ones, that with this signal, this pricing signal, it will send a signal for them to say, we do believe that we can use gas and use gas sustainably going into the future? That's one side. The flip side to it is, do we believe that the proposed pricing system would ensure that prospective suppliers and even alternative supply of gas other than whatever the current means of supply are, that we believe that they would be able, those suppliers would be able to look at South Africa as a good prospective investment destination for both the infrastructure as well as these alternative methods of supplying of gas. So I guess I'm asking, is this futuristic, or are we just, this methodology, are we just looking at regulating the existing supply, regulating that to ensure that they don't get monopoly prices, and also regulating for the benefit of the current users? Which one is it? Is this for future, or is it only limited to the now? Thanks, Chair.
Thank you very much, Mr. Kumeta. Again, the questions are very specific, and I think they're all very important in the understanding of the approach. And I really hope that the team now, you will respond accordingly. And fortunately, these matters were discussed before outside of the platform. So you should have the answers to this as to whether this interim is intended to deal with the now, with the current economic problem. And therefore, it is not something that will be used to regulate the gas market in South Africa for the future. So that it becomes important, because you want to see whether an economic regulator is responsive to the challenges that are experienced in this market when it comes to prices, especially where there is no competition. I think that's where our mandate is, because our mandate does not anticipate a situation where gas prices will forever be subjected to regulation. it will only be subjected to regulation if there is no competition. But once competition is desirable, the state of competition is desirable, then there will be no need to regulate the gas price. That's why we have the price regulation. So you then need to respond to the questions as they are put by the members, starting off with Mr. Mkhize. And please, colleagues, all of you, please respond to the questions. May I then, Ms. Makota, I don't know, be very brief if you want to tackle one or so or two questions, and then allow other colleagues to also come in and respond to questions concisely and straight to the point.
Thank you, Chairperson. Chairperson, we thought that it is important that we go back to that question first that was asked as part of the workshop, which was, what is the economic principles underpinning this methodology? So I want to ask Mr. Mutsau just to go back to it before we answer the other questions. Mr. Mutsau.
Thank you, Ms. Makora. The is that to some extent gas prices should be reflective of cost. And that is actually aligned to the international best practice and how globally natural gas prices are set, and how these commodities actually priced in various considerations. Earlier on, I gave an example of the IGU classification framework of prices, where this pricing framework fits in very well, and that it has been adopted, although of course it is considered quite ancient, but yet it is very relevant when it comes to markets that are still evolving, markets that are still not yet so much established. So the relevance of this approach is also enshrined in the arguments that were put forward in the Constitutional Court judgment, as has been raised by Mr. Gotora earlier on, that it facilitates, the distribution of economic surplus in an efficient and equitable manner. Although we are, quite cognizant of the fact that because the market itself is very monopolistic, it may not so happen on a 50-50 basis, but there's reasonable, distribution and sharing of surplus between suppliers of natural gas and users, if we adopt this cost-based pricing regime. Thank you, Madam Chair.
Thank you very much. I think you need to also just rephrase or reconcile that the approach, where what is it that we're looking for here, even when NERSA gives effect to Section 21(1)(p). It is to find a competitive price. That one, there's no dispute. We are required to find a competitive price since there is no competition. So we need to compensate for competition. That is the principle adopted in the Supreme Court of Appeal in the way that it is interpreted. So how do we then find a competitive price? That is what NERSA should be doing. And in finding that competitive price, NERSA is required by law to make sure that it balances the economic interest of both the suppliers as well as the customers in finding that competitive price. And that competitive price, the inherent risk is that not only here by NERSA, any regulator that is tasked to set a price cap or a maximum prices, the inherent risk is that there might be a chance of setting the price too high or setting the price too low. And that should always be something that the regulator guards against. And therefore, it is the reason, or at least the important thing is to then test what you're proposing as to whether then setting this or coming up with this proposal, will this proposal ensure that the demand sector will be able to afford the price? And affordability is the key word that is on our act in Section 2 of the Gas Act. It becomes important. And it becomes a challenge again when you trying to find that affordability, where at the same time the Act says you must also facilitate investment. How do you find the right balance, sort of the equilibrium point, where you must also be able to put a price at levels that will facilitate or attract investment, but at the same time, that price must be affordable to the users, so that then you find the equilibrium point between your suppliers and the customers from the demand side. And the Constitutional Court says, in order for you to do so, you must have the surplus. It says that in having the surplus and in finding that competitive price, you must not ignore the costs of a monopolist, especially if you are in a market that is characterized by a monopoly. It says that you can't just dive into an international benchmarking approach and your methodology ignores cost consideration. That's what the Constitutional Court says in finding that competitive price that we are required to find. Now, it says when you do then come up with your methodology, you must make sure that it has the cost component so that you consider the cost, and then from the cost to that maximum price or the upper bound, there must be that surplus, meaning the gap, cost price gap. And that surplus must make sure that it does not benefit only the supplier to the detriment of customers. That surplus must be, the amount of it must be such that it will also meet the economic interest of the supplier, meaning that it must be equitably distributed between the supplier as well as the customer. So I think that it is very important that one articulates that kind of principle in the exercise and in this kind of a decision that is required today as to what are we doing, what are we trying to achieve here. And when we say that it is interim on two grounds. First is that gas prices will not forever be regulated. Should there be competition, or should there be a finding that the state of competition now is at a satisfactory level? So that is the first thing. But also with this particular price, what is the economic problem? It becomes temporary because you are faced with a monopoly or a near monopoly situation. And therefore, once you are faced with that, your approach of dealing with the problem at hand will be different when you are dealing with the market that is where competition is sufficient. So you can't have the same approach. So the approach that you will then take is one that will make sure that you constrain market power. So that is what the team explained earlier on, and I think it's important that you then emphasize that interim. And the interim is intended to deal with the current market setting, of which market setting will then present uncompetitive outcomes and the possibility of exploitative prices, and also overcompensating the monopolist in terms of the abnormal profits that it will earn or derive from any pricing where the maximum price is inadvertently set at very high levels, because then there will be no other market as any player in the market that will then constrain that price of the monopolist. But if the situation was different and oligopoly, two other players independently, they would have maybe had an opportunity to then mitigate or countervail that price. Mr. Kumeda, please come in if there's a follow-up, and then we will also ask the team to come in and also respond to the other questions. I'm sorry if I then allowed you to or to open up for further questions from your side before the team comes in and answer other questions. Mr. Kumede, followed by Mr. Mkhize.
Thanks, Chairperson. A quick follow-up. I think in respect of the answers that have been provided, the question that I would then ask is that if we are saying we've got an interim problem, which will be which will go away once there is a change in the supply or in the market structure going forward. The question is, how would this particular pricing system support that future? Because if the current pricing is such that the South Africa is not an appropriate investment destination for both the users of gas, who are the drivers, because the investment is always demand driven. You need to have the users of gas that want gas, and then you can then have market response in terms of supply. But I'm asking the question, in coming up with this pricing, this interim pricing, how do you make sure that the interim pricing itself is supportive of the change that you want, such that you can correct the current market structure? Thanks.
Thank you, Mr. Kumete. Very good question. Mr. Mkhize?
You know, noting the response around the issue of being interim, because you're saying it could be found to be no longer desirable in future. There could be this lack of competition going forward, and to deal with the current market setting. My understanding is that is actually a defining feature of the South African market, and then there would be progress that then moves towards that. Yes, I appreciate also the first part that Mr. Kumete is putting, but I've also got the other side of the coin to say that why define it as interim and just not have it as the mechanism that we use, because it then becomes an alternative of the mechanism. Because there's nothing to me that says that if you've got a cost plus, because we had a cost plus pass through in the past, and then if you've got a cost plus and maybe to define the difference with the cost pass through, and then you were saying that it could be applicable irrespective going forward, because there's nothing that says to me that once something new comes in, that price will not, this methodology will not be necessarily applicable. One. Two is that if it is a feature in the current situation where there is still no competition in terms of Section 2 and 3 of the Competition Act, that we do the evaluation thereof frequently. My question will be, shouldn't we just call it a methodology? And then when it comes the time to review it, we'll review it like we will review any methodology based on changes in the landscape. But we just keep it as a methodology that we use. Thank you.
Thank you, Mr. Mkhize. Guest team, please now respond. Luis, Mr. Kotora, Mr. Njezula, and Mr. Menjarel.
Thank you, Chair. Chair, I would like to respond to Mr. Gumede's question that was twofold. The first is, do we think that this approach will encourage a switch from other sources of energy to gas? And then secondly, do we believe that this methodology provides adequate signals for investment? Chairperson, just to focus then on the first question, whether or not this methodology will facilitate or encourage energy users to switch to gas for their energy source. Chairperson, we believe that this methodology does do that because it is cost-based and it is based on a competitive margin. In other words, there is not room for monopoly margins to be made, and therefore it is a fair price. And it also signals that NERSA will not tolerate monopoly prices in this industry. Secondly, Chairperson, with regards to whether or not this methodology provides adequate signals for investment, Chairperson, again, yes, we do, because this methodology signals to investors that they will be able to recover their costs, that they will be able to earn a reasonable and competitive margin on their cost. And also importantly, Chairperson, that the regulator in the market will not allow monopoly profits in the industry. In other words, this is that the distortions in the market that is currently there will be is properly managed by the regulator. Chairperson, then also just to add that with regards to the volatility that was raised as a comment by Mr. Mkhize, the volatility in the margins that we have proposed as benchmarks is managed by the fact that we are averaging it over a period of 5 years. So that then takes into account the peaks in the industry and the downturns in the industry that would make margins volatile. So we have chosen to use an average of 5 years to address that. Chairperson, I think I'll end there. Thank you.
Thank you. What you haven't responded to, another part of Mr. Gumede's question is that in as much as you talk about the demand side, that maybe they'll be happy that at least there's a margin that is determined in a particular way, and the price is also based on that. However, will this be sustainable in the future? Remember, they want to use gas sustainably in the future. So if then it doesn't hold on the investment side, you regulate in such a way that investors do not see the need to enter this market so that they improve competition conditions. So if there is no entry and there is no investment, it means that then what you have currently will be depleted. So gas is a depleted resource, as we know that we are facing that situation, even with the one that we are regulating now. So we are facing that situation. Now, if we are facing that situation, aren't you anticipating risk with your pricing approach, your pricing formula? If your pricing formula fails, because that's the measure that you need to put for yourself, to set for yourself, if the pricing formula fails to then facilitate entry and facilitate investment so that you then have competition, then the very same gas users will not be in a position to use gas sustainably in the future because there will be no gas, because it's a depleted resource. That's the question. From Mr. Gumede. Mr. Mutsao?
Thank you, Madam Chair. To add to what Ms. du Plessis has said, we are quite confident, Madam Chair, that this methodology is going to make the South African market quite viable to investors, in the sense that we believe that the signal that it sends, it is quite attractive and quite or rather it is bringing optimism in the market. For instance, Madam Chair, you may recall that as it stands right now globally, the Asian market is driven by a premium. The European market is also driven by a premium. And what we are precisely doing here in Southern Africa is that we are also, setting a Southern African market premium, which a market signal that does not only point to South African market conditions, but a price signal which is going to characterize a pricing condition in the region. So we do believe that we will go a very long way to attract investment in this market in the future. And in that regard, we then believe that this approach is actually futuristic. Thank you, Madam Chair.
Mr. Kotora, and you, may you also, the team has also touch on what has been the position that has been established, because in the way that you look into that futuristic and whether this approach will be appropriate, is looking at what is the realistic alternative competitor now. Is it not the LNG supplier that will be the alternative competitor in the next 2, 3 or 4 years? Is it not that? So if it is, because you must know what you're regulating for what and what kind of entry you expect and the investment that you're trying to attract into this market. So you know that realistically, the alternative supplier who is going to be the competitor to the monopolist as you are trying to deal with this problem, it will be the LNG supplier. And in this methodology, the LNG supplier, the pricing approach is the one that is competitive, as you have indicated earlier on. So there will be no challenge as to the facilitating investment or attracting investment insofar as attracting the LNG supplier that is supposed to come into the market and also improve on economic on competition conditions. I think that's the point that you also forgot. Mr. Kotor?
Thank you, Chair. Chair, I think also without being defensive, the questions we have been also provided by the committee are very relevant for consultation purposes, because we plan on engaging with potential investors into the market to also get their views on this aspect. We have our preliminary views which have been shared by the colleagues, but would really want to engage with the market so that we get a view as to whether this proposal we have come up with is something that also incentivizes their proposed investments. So, and there have been several questions here that we have been asked. For instance, what happens if the margins of these proxy companies skyrocket as well? These are very relevant questions, Chair, and we have tried to make sure that, like for instance, we're taking a longer period average, but it's a very also relevant question which we plan to consult on as well. But at the same time, we are trying to ensure that we have a longer averaging period to smoothen out volatilities that, like what we have seen in the current market. The improvement, Chair, from the old pass-through is that we are cognizant that there has to be a profit added to the cost, and that profit we are using a competitive benchmark to establish what is the level of profit that's prevailing from other countries or competitive destinations, which we then use in the current market. But Chair, because this is a consultation document, we also want to get the views of stakeholders on these aspects, and we are expecting to engage thoroughly with the market, even in one-on-one discussions, as well as allowing ourselves or opening our doors to as much discussions as possible. We are very grateful that some of these aspects we are being asked today. We are, in as much as we have preliminary views, Chair, we plan on soliciting views from stakeholders as well. So I thought this should be known that we are very grateful, in as much as we may not be providing convincing answers, but we plan on soliciting views as well as doing some further reading on our own, so that we come back to the committee with solid responses and to fine-tune our proposal, so that we are not dictatorial in our approach, but we try to balance what the various stakeholders will be providing to us, Chair. Thank you.
Thank you, Mr. Kotora. Any follow-up, Mr. Mkhize? And
I think, yeah, Chairperson, thanks for the responses too. But I think I'm partly covered by what Mr. Kotora raised, because it's one thing to give a response here, but I think that as a team you need to have well thought through responses, be able to then take what has been asked and package it in the very consultation document, posing these same questions to the public so they can also be able to input. For example, we can't talk of futuristic and then we're talking interim at the same time without being deemed really to be to making this to be confusing the person that is looking at this, because if it's futuristic, then it must have features that will prevail going into the future. If it is only interim, it means that it's just for the short term. And in terms of signaling, if something is interim, it doesn't help in terms of signaling that much, because it means this is just a stopgap measure. And what I'm saying is that I don't find something necessarily that says that this is not going to be, it cannot be dealt with going forward. It can still not find some kind of application with tweaking, obviously, because whenever there are landscape changes, you revise and you tweak here and there to keep being efficient without impacting on the stability also and regulatory certainty of the industry. But we must also underscore the issue of regulatory certainty on our side. So I just wanted to put that to the fore. If we're looking at this method as for approval, it will be a different issue, but we're looking at approval for publication for public comments, which then becomes a different issue, because there's still going to be a lot of refinement, as Mr. Kotora has said. If that is the approach, then I would be amenable to really responding to the affirmative with regard to the recommendation that has been put forth. Thank you.
Thank you very much, members. I think we are coming close to now the recommendations. If members, because this is, as indicated, this is the proposal for stakeholders to engage with this, given all of the challenges that we have encountered before. And these challenges always, they drill into the current market structure and what is manifested in terms of the pricing behavior, even when the maximum price level is set at certain levels that one believes will attract investments. And then the problem is how far do you go from the cost? That's why even the court had to give that consideration. How far do you go from the cost up to that maximum level? It is a challenge to get there, not only for NERSA, but also regulators elsewhere, because the challenge, therefore, it will be setting that maximum very high such that people are unable to afford, or setting that maximum very low such that you discourage investment and not even improving competition conditions. So those are some of the challenges, and these are inherent risk that we are faced with. But it is also important for us to not take decisions that will again cause NERSA to sort of have an adverse finding when matters are taken to the courts. Because the reality is that you're looking at the current situation and whether NERSA, you are taking an approach that deals with the current economic problem. So if you fail to deal with the current economic problem, then you fail, because then you are not responsive to the challenges facing the industry that you are required to regulate. So it is also important that we keep that in mind, and also keep in mind the fact that in as much as we're required to facilitate investment, that when it comes to price regulation, it is not an indefinite exercise. It is something that must be done until such time that the way that you regulate, you will be able to attract investment and entry and introduce competition, so that you don't need to regulate prices going forward, and you regulate other natural monopolies, such as your transmission, distribution networks. So having said so, members, I would like to then take you to the recommendations. Recommendations are also subject to the improvements, and within the understanding that this document is going out for public consultation, and that all of the important questions that were put here will also be incorporated here, just as those questions will be put the way that members have asked, so that stakeholders can respond to those questions, and therefore we can be clarified better when the regulator is required to take a final decision on this matter. The recommendations are on paragraph is paragraph 12. Actually, the numbering is incorrect there. On page 18, the overstamped page is page 18, and the recommendation is that the pipe gas subcommittee is requested to note the discussion document on the review of the methodology to approve maximum prices of gas, and that methodology is annexed as Annexure 1, and that is subject to also those questions that are put and clarifications that will be incorporated. And then secondly, the subcommittee is requested to approve that the discussion document be published on the NERSA website for public consultation. Members, can you please indicate your support for these two recommendations, the noting and approval for consultation?
Subject to enhancements. Thank you.
Yes, as I've read out, Mr. Mkhize, thank you. It is subject to those enhancements as indicated. They are spelled out in the questions that members have put here. And all of those questions, the team will make sure that they are incorporated when this document goes out for consultation, because we want to get answers. Thank you very much, members. Advocate Sithole, Mr. Mkhize, Mr. Gumede, and also support. Thank you very much, members. We've taken long because this matter is very important. And we now move on to item number 7, the progress report on the review of the maximum price methodology, which is this particular matter. The team had prepared that document earlier on, but also just the analysis of stakeholder comments. I'm giving you 2 minutes on this because you've touched on the nature of the concerns. And there are other concerns that you may not have captured. Just be careful about that. You've got to answer those. Also, as we received the email reminding us about the comments. Please, Ms. Makota, can you please take us through item number 7?
Thank you, Chairperson. Yes, this item is related to the agenda item that was discussed. This is focusing on the analysis of the stakeholder inputs that we received as part of the public consultation process. Perhaps for the benefit of the other people that are here, we will just summarize what are the major inputs that we receive as a part of the public consultation process. The first input that we received, or the major input, was relating to the fact that the stakeholders were requesting NERSA to consider different methodologies for the importers of gas and also for the importers of LNG and traders of gas. And this is due to the fact that we are anticipating different sources of gas in the country. And therefore, it is important that the methodology recognize this. And we have therefore taken this into consideration in the proposed second consultation document, which looks into the fact that we have a methodology for the importers of LNG and a methodology for the importers of gas from regional markets such as Mozambique and for third-party traders. The second issue that was canvassed is the issue of the sustainability of the gas industry. Stakeholders have requested NERSA to take this into consideration, in more so because we are experiencing depletion of gas in Mozambique, and therefore stakeholders have recognized that there is a need to ensure that there is additional investment and additional or alternative source of gas into the country. And this also we have taken into consideration. The third issue is that one of the determination of the calculation of the marginal cost of gas. Yes, the Chairperson, we agree that there may be challenges in terms of the complexity and the quality of information that we receive for the calculation of the marginal cost of gas. And therefore, our proposal in the draft discussion document is that we use a proxy to come up with the marginal cost, and therefore the acquisition cost of gas is used as a proxy for the marginal cost of gas. The other comments were relating to the merits of the other different methodologies that are there. In short, Chairperson, most of the stakeholders were in support of the cost-based methodology, and the dominant supplier in the industry is in favor of the retention of the current methodology. We are requesting that the members note the report. Thank you, Chair.
Thank you very much, Ms. Makota. Members, do you have any questions on this? All that I can say is that the team needs to just be careful in highlighting the nature of inputs and proposals. If it is going to leave out other stakeholders' input, that is a risk, because if you don't lift it up and already you are warned by other stakeholders that they made proposals, and if they don't come out and you simply emphasize others, that becomes a challenge for NERSA. And I'm hoping that you will guard against that, and you will make sure that all of the comments received are analyzed and considered, and so that you limit any risk of NERSA being taken to court for ignoring proposals that were made. It is not to say that NERSA must adopt proposals of specific stakeholders, but NERSA must show that it has properly considered what was proposed, and then it has taken its own decision. And it does not have to be what a specific stakeholder has proposed, but you must show that you have given due consideration to that. It is a constitutional requirement, and I'm hoping that you will be able to show that all of the proposals have been covered and responded to. Mr. Mkhize?
I'm partly covered by what you have said, Chairperson, but I would also like to add that it will help that for the benefit of the members, some of the comments, we just don't say noted the comments, because anyway, all of them are noted. It's then the stance on this, on the comment received, so they can just add the members to see what position we're leaning towards. That is just my contribution to this. Thank you.
Thank you very much. Members, I take it that there are no other comments from the other colleagues. If not, thank you, Mr. Mkhize. And I think then I would like to then take you to the recommendations. And recommendations are subject to what Mr. Mkhize has raised and the point that I've emphasized with regards to the nature of all of the responses, or sort of proposals. And there must be responses, because those responses will show the extent to which NERSA has applied itself to the issues that were raised, as well as the proposals. Failure to do so will not be tolerated, because then it might just risk NERSA being taken to task about that. So the recommendations are on page 15, the overstamped pages, and it is item number 12. Again, the numbering is incorrect, but it should be 12.1. It is recommended that the Pipe Gas Subcommittee notes the progress on the methodology as it was presented earlier on, as well as to note the analysis done in terms of stakeholder comments, and this analysis will be enhanced and responded to sufficiently. Members, by show of hands. Thank you, Mr. Kumede. Thank you, Mr. Tole. Thank you, Mr. Mkhize. And I also support the noting subject to enhancement and responses being made to be adequate to all of the issues raised. Thank you very much. Sorry. We move on to item number 8, which is the update on market risk premium as well as the risk-free rate calculation as of the 30th of June 2022. That is item number 8. Please take the matter as read and emphasize on the importance of this item and where and when do we utilize the calculation that you are presenting before the committee.
Chairperson, Mr. Keswa will introduce the submission.
Thank you, Chairperson. This is the update on the market risk premium and risk-free rate calculation for the period ended 30 June 2022. Chairperson, the purpose of publishing the calculation on a quarterly basis is to maintain and ensure consistency in the calculation of the two variables. Licensees use the market risk premium and risk-free rate in the cost of equity calculations when calculating tariffs and the maximum prices of gas. So publishing the calculations, Chair, enhances transparency and predictability of the aforementioned components of the gas prices in South Africa. So for the period under review, Chair, the market risk premium is 4.61%. The risk-free rate is 10.18%, which translates to declines of 0.25 and 0.04% respectively. Chairperson, we recommend the PGS to note the market risk premium and risk-free rate calculation for the period ended 30 June 2022 and to approve the publication of the calculations on the NERSA website. Thank you, Chair.
Thank you very much. Members, there you are. The calculations used in the trading margins as well as the tariffs. Any questions, members, by show of hands? If none, members, if members are happy, then may I then take you to the Mr. Mkhize?
Thank you, Chairperson, and thanks to the presenter. I'd just like to highlight that under authority, that authority talks to the approval of maximum prices, but not the issue at hand. If they can just look at this delegated authority and amend it accordingly. And then on table 1, I think that the timing or sample period, they should just say there is 360 months, then 30 years in brackets. So it's just bringing the months in front. That is all. I support the recommendation. Thank you.
Thank you, Mr. Mkhize. It is for enhancement. If that enhancement can be incorporated, please, and correct, as Mr. Mkhize indicated. Members, with that, are you happy then to note by show of hand? Thank you, Mr. Gumede. Mr. Mkhize, I note that you've supported, and I also support. Not sure if Advocate Sithole is in the meeting. I can't see, but yes, thank you very much. I also do support. Thank you very much, members. We move on to item number 9, and item number 9 is the report on the 5 tariff methodology approaches contained in the tariff guidelines. Please touch on the why this submission, what triggered this submission to be here, and what the submission seeks to do, and what are the issues that came up, and how the methodologies in the tariff guidelines deal with those issues that came up during the previous discussion. Those 3 specific issues as a framework to your presentation, please. Thank you.
Thank you, Chair. Chair, the submission is here for noting of the 5 tariff methodologies contained in the tariff guidelines. The context, Chair, is that is to provide clarity on some of the approaches that are contained in the tariff guidelines and how we are using them in the determination of tariffs. We have observed during meetings of this committee that there are some instances where the team is required to provide some explanations on the methods contained in the guidelines, such as how we are using, for instance, the discounted cash flow method, or amongst the other 5. So this report, Chair, is expected to be included in the workshop that will be held when we discuss the various pricing and tariff related issues that have been identified by this committee. So this is a first dab at providing the reports that we will that provide the background to that discussion, because there are several aspects that require clarity from the way we have been implementing our tariff guidelines. Chair, some of the issues we discussed also touch on issues of the advantages of the rate of return, as well as its disadvantages in that it does not provide incentives for licensees to contain their costs, because all costs incurred are covered as they are. What we regulate is the profit level via a WACC. We make sure that the profit is limited to a WACC component, but costs are passed through. Chair, these discussions, we expect them to unfold when we then have a workshop, but this was a first attempt and a report to start such conversations and provide background, so that when this workshop is finally held, we have some reports that can base our discussions from. There are issues that we have not adequately addressed that we feel really need the committee's decision or discussions on, particularly what happens if volumes keep declining or volumes become very low, which are used as a divisor in coming up with tariffs. How do we ensure that we incentivize licensees to utilize the capacity of their infrastructure? And if volumes keep declining, what should the regulator do? This has been excluded, Chair, because we are trying to scout around whether other jurisdictions face this problem and how do they handle it. So it's an issue that will then add into this report at the time when we may be having these discussions, Chair. We will not take much time presenting it. We'll consider the report as read, Chair, and ask the committee to note the report. Thank you, Chair.
Thank you very much, Mr. Kotora. I would like to open the matter up for questions from members and for any specific guidance, maybe, even if it's for future purposes, if members have any for purposes of improvement on the tariff guidelines in the future, or on these specific methods that are included in the tariff guidelines. Any comments, members, as well as perhaps guidance on future improvements? By show of hands, members. Mr. Mkhize.
Thanks, and thanks to Mr. Kotora for the presentation. I would, when I read this in the beginning, I said to myself, maybe a proper paper in conjunction with RAR would do. But I think that is important when it comes to the context to indicate also just to briefly talk to what is in scope and out of scope, and highlighting that this is not meant to be a detailed document highlighting, dealing with all the aspects, but simply to provide a high level on what is being considered in the setting of tariffs. So I think for me that would help, because one would ask and say, as a committee, are you really happy with this document as it comes before you to note this? Because one will expect maybe a detailed treatise on what is really being addressed here. So if we can just be able to because I think that will assist in protecting the committee in terms of at what level did they pitch this particular report in noting it and in providing comments, because I think that there's still a lot of work that will then follow, feeding to the workshops as we have already articulated. And I'm not so sure as to the need for the noting this by a committee per se. And then it will also help when I look at 6.4, when we're looking at monitoring and the approval. the tariffs, the process that is undertaken when looking at the Act, to also maybe talk to what is envisaged in the latest version of the amendment bill, so that we are kind of not looking as to the situation as is now, but considering how it could pan out in the future. Thank you.
Thank you, Mr. Mkhize. Mr. Mkhize, I'm not sure about the point about noting. I think the noting is the work that has to come to the committee, taking up concerns or comments made by the committee previously, and just to sort of clarify further on the issues that are in the tariff methodology and how we deal with those issues of I think the volumes or the discounted cash flow. So it is just to note that there was that additional work that was done for the committee's attention. It is not to approve. Mr. Gumede?
So sorry, the chairperson. Sorry, okay. I was responding if I was asked, putting that forth in the sense that we've had instances where something flows out, it's a matter arising, and it's addressed as a matter arising rather than as a separate presentation to be a submission to be noted as such. So it's from that angle, because then it also talks to the depth of what is being put forth in terms of it being for the committee really to engage on and find satisfaction, because then it talks to the issues of quality, the depth of the information being presented, as well as the integrity of whatever data or is put before the committee. Thank you.
Thank you. Mr. Gumede?
Chairperson, thank you. Actually, I'm partly covered by Mr. Mkhize. I had decided that I wasn't going to comment on this one. But there are aspects that, one will comment to when that workshop is held. But and even so the document itself, for me, as if it's a matter arising and we are noting a matter arising and there are particular issues raised, for instance, in terms of the particular methodologies that are being used, and this is a matter arising, addressing that, I think it then makes sense why it's before us. But I also had the same kind of concern that was raised by Mr. Mkhize. But now that I had decided to say something, I would like to just raise one thing that says it's important to remember that different regimes in the world approach regulation very differently. So the US approach, which is broadly used in South America and places like that, and it's something that comes out of a school from Boston, for instance, from Boston University, versus the Adam Smith approach are very, very different. And that, I think, for us, when we are going to comment on issues, it would be useful that when we do literature survey, that we approach this thing from a balanced point of view. That how different domains, how Australia or New Zealand would approach regulation is very different to how regulation is approached by people perhaps that had to deal with real monopolies in the oil sector, railways, from the 1900s or from the late 1800s. Now, I think for us, when we look at some of the issues raised, it becomes important to say how balanced is the issue that's been put before us in respect of the sources of information that have been used in characterizing any report that's set before us. So I'll then implore colleagues to, firstly, it's important to note those differences, and they are major in approach. And then when the matter is put before us on a theoretical platform like this in terms of regulation, should be premised accordingly. And yeah, thanks, Chair.
Thank you very much, members. You can see that this generated a discussion. So it was that's the reason why the submission had to be done in this format. Part of it was to deal with the issue that one may classify as a matter arising. And secondly, it was also to go further in the explanation of the substantive issues contained in those methods that are in the tariff guidelines. So it is twofold, and hence then it had to be brought here as a submission. So on that basis, then, and also the fact that we said that there must be a workshop on this, of which workshop will also take into account and take the discussion further on the issues that also Mr. Gumede raised right now, and also Mr. Mkhize's issues that he raised. Yes, the content went beyond that. So as I indicated, it is twofold. One is the matter arising, but the team decided to go further than just respond to that single issue on the matter arising. It decided to take an opportunity just to apprise the members of what is involved in the methods. So members, it is on that basis that the submission came in this format, and it doesn't take away the workshop that is required for improvements on those methods going forward, and also just helping the team in terms of the approach, to guide the approach going forward. It is meant for that, and there is a benefit on that in that regard. So if I can then take you to the recommendations. The recommendations are for noting the yes, there is the aspect of the matter arising, but also the issues that went further than that, and that the workshop then will be done to take into consideration the input and guidance given by some members in this committee on those specific methods. Members, are you happy then to note those the content and also and noting that the guidance will also be taken up in the workshop? Thank you, Mr. Gumede. I also note. Thank you, Mr. Mkhize. Advocate Sithole, happy to note.
Yes, Chairperson, I do.
Thank you. Thank you so much. All right. Thank you, members, for that support. We withdrew item number 10. We're now on item number 11, first quarter report. On the compliance with license conditions. May you please take the matter as read and highlight what the findings are at this time on the compliance with license conditions. Mr. Mkhize, is that the lingering hand? Thank you. Please introduce the matter, Mr. Milato.
Yeah, thanks, Chair. Mr. Thabang Sekhupulo will take us through the report.
Thank you, Chair. Before you is the first quarter report on compliance with license condition for the operation of the gas facilities by Sasol Gas in the Germiston East area. And then in this first quarter, 10 facilities were inspected, and there were 2 instances of non-compliance which were discovered, and they were due to the overgrown dried vegetation, which poses the risk of fire at 2 stations. And then this is a non-compliance with condition 16 of the license, section 2C of the Gas Act, as well as paragraph 7.3 of the API RP 1173 standard. The other instance of non-compliance was due to the absence of the notice board with displayed emergency contact number for members of the public. This was on 5 customer meter stations. And then this is the non-compliance with condition 19.2 of the license issued to Sasol Gas for Germiston East. And in its response to the mentioned instance of non-compliance, on the 22nd of July 2022, NERSA issued Sasol Gas with a letter of preliminary findings of non-compliance and a request to provide reasons why it should not be issued with notice of non-compliance. Sasol Gas is given until the 5th of August to respond to NERSA's letter. We therefore recommend that the PGS members note the first quarter report on compliance with license condition related to Sasol Gas Germiston East distribution license, and then the FTRM for pipe gas has issued a letter of non-compliance to Sasol Gas. Thank you, ma'am.
Thank you, Mr. Sekhupulo. Members, the matter is open for discussion, comment, guidance. Thank you, Mr. Mkiza. You may go ahead.
Thanks, Chairperson, and thanks to Mr. Sekhupulo. I would just like to know that 6.26, right, states that the Sasol gas was given until tomorrow, which is the 5th of August 2022, to respond to the letter. I just wanted to get maybe if there's any update to this regard, because this tomorrow is like a due date, and they could have maybe responded earlier, which would not be unreasonable to expect maybe some response by today. Is there any response that has been received in this regard? That is all I have to question from my side.
Thank you so much, Mr. Mkize. Mr. Milatu and Mr. Sekhupulo, please respond to Mr. Mkize's question.
Okay, thank you, ma'am. Yes, indeed, Mr. Mkize, Sasol has, in the past week, I don't know the exact date yet, they did mention to us that they communicated with their customers to clean their meter station so that we don't have those risk of fire in the meter station. And then they have also indicated they are looking for another method, another material whereby they can display their emergency contact numbers, because they realized that the ones that they displayed before were stolen because they're metal. They were stolen by people in that area, and then they are they are recycling it at this metal industries. So they are trying to find another method whereby these emergency contact number boards won't be stolen. Thank you, ma'am.
Mr. Mkize, are you happy with that clarification? Are you covered, Mr. Mkize?
I am covered, but I think it should be talked to the issue of the finality in responding to the letter for the preliminary finding of non-compliance, and to get the feel whether this is satisfactory in terms of compliance enforcement, highlighting the issue here, which I think is one of criminality or law enforcement that tends to generally affect every aspect of our lives, which is becoming more and more of a challenge. We've seen the stealing of product in the sector, now the stealing of these materials. So these are the important things that I think we need to note that undermine whatever that we seek to do. But I'm happy to note this submission as stated, Madam. But whenever we're dealing with law enforcement or compliance and monitoring and enforcement, we need to be very categorical as to where we stand with regard to the responses we're getting from the licenses. Thank you.
Thank you so much, Mr. Mkize, and I'm hoping that, Mr. Milatu, you have noted that and the approach that you need to improve on when it comes to enforcement of non-compliance. Thank you very much, members. In terms of the recommendations, members are requested to note the findings that were made, and that the FTRM to issue a letter of non-compliance on the preliminary findings. Please, let's just put the word order there. It's not the preliminary non-compliance, it's the letter of non-compliance on the preliminary findings, for which then the Sasol Gas must respond to, or given the opportunity to respond to, in line with Section 26(1) of the Gas Act. If Secretary, you can capture it that way. Sorry, I also missed it, the word order there. Members, by show of hands. Thank you, Mr. Gumede, Mr. Mkhize, Advocate Sithole. I also support. Thank you very much, members. With that, a slight correction on the recommendation. Now we are on agenda item. We are on agenda. Sorry, who's speaking? Who's speaking? We're on agenda item number.
Chair, apologies. I think, I suspect it might be Mr. Gumede. Please check his messages requesting to be excused. Thank you.
Oh, okay. Okay.
But it was me who was speaking.
Yeah, it was not, of course, the mic, Mr. Gumede's mic was off, actually. I was looking at all the members because I thought maybe the members wanted to say something. All the members' mics were muted. All right, Mr. Gumede, I note the message on the chat. I will be very quick if you can just stay for this one. Is the monthly volume balance for the month of June 2022. Take the matter as read and highlight any variances, if any, issues of gas supply, and also issues of whether the volumes of 160 gigajoules will be, million gigajoules will be achieved.
Thank you, Chair. The purpose of this submission is to request Pipe Gas Subcommittee to note the Sasol Gas Volume Balance Report for the month of June 2022. During the month of June 2022, Sasol Gas imported approximately 12.7 million gigajoules of natural gas to the South African market. The expected maximum export delivery is 13.4 million gigajoules per month. So the percentage variance for June 2022 was negative 0.96, which is within the acceptable limit of Great International benchmark of 1%. It is recommended that Pipe Gas Subcommittee to note Sasol Gas Volume Balance Report for the month of June 2022. Thank you, Chair.
Thank you very much, members. Any questions with regards to the volumes that were shipped to South Africa, to Secunda, for the month of June? Any concerns? If none, members happy then to note these volumes and the variance that was observed, at least in the month of June, of which variance, at least according to the analysis, it doesn't raise concerns. Are members happy? If so, please can raise your hands, members, in support of the recommendation to note. Mr. Mkhize, are you noting?
I'm noting. Thank you.
Thank you, Mr. Mkhize. Thank you, Advocate Sithole, as well as Mr. Gumede. I also note. Thank you very much, members, for your contributions and for all of the input, invaluable input that you have provided for all of the matters that were deliberated by this committee today. I appreciate your input. I appreciate the spirit in which you engage with the matters, and I'm hoping that we will improve, or the team will improve on all of the sort of due diligence as they should in the matters that are brought to the committee, and they will also take up the issues that you've requested them to. And at this point in time, I would also want to thank stakeholders that observed the proceedings and the openness and the frankness and robustness of the discussions that took place today. And at this point in time, I would like to then close this session for the members of the public, and would like to then have the live streaming stopped at this stage so that we can go to the closed session of our meeting. Thank you very much. Mr. Mateja, can you please confirm that we're now on a closed session?